Just a reminder, there's four traders: bond traders, commodity traders, currency traders, and stock index traders or stock market traders. Okay, so those are the four animals that make money.
Okay.
And they all just stay in their own little area of the jungle. Currency traders don't trade stocks. Commodity traders don't trade bonds. Okay, everyone's just that's their specialization. They don't care about the other markets. They don't trade other markets. So because of that, CNBC took it upon themselves to have all the information for all the kind of traders. This is why this is the most popular, the accepted uh, news channel, news network, news information that everyone goes to. Okay. So this is I'm going to say the standard. Okay. So if you look here, for the bond traders, they would go right here. Okay. For crypto traders, they go right here. Gold traders, just part of commodities. All traders go here. They're part, as part of commodities. Forex, all the currency traders would go here. For the stock traders and stock index traders, especially stock index futures traders, they're going to go here. Asian markets. So those stock index traders, they trade basically four markets: Asia, China, and Japan. Europe, that would be France, Germany, and England, or Great Britain. And the what we call emerging markets, that's the rest of the world. Canada, Russia, Latin America, Mexico, Brazil, there's a whole bunch. Greece, Saudi Arabia. So that's called emerging markets. And of course, the last market, US stock market. And basically those guys just look at the US indexes. Pre-market would be these guys. So those are the indexes that they'll be looking at. Dow Jones in Industrial, Standard 500, and the NASDAQ Composite. Not the NASDAQ 100 Composite. NASDAQ Composite is all the stocks that are listed on the NASDAQ Stock Exchange, approximately 3,000 companies. NASDAQ 100 are the best 100 companies within that group or within that index. Oil, because it's a very, I'm going to say, global commodity of demand, it's quoted here. And here is the standard for bond traders. It's the US 10-year Treasury note. We call them Treasury bonds. 10-year just means that the maturity date is 10 years. And that's the number I'm talking about, the yield, 4.599%. What does that mean? It means after 1 year, that's the return you get. If you invest 5 grand every year, that's the return you get. 4.5% of 5 grand, I don't know, might be maybe $230 US, something like that. Okay. So that's just kind of a quick snapshot overall how traders use this website, which traders would use which part of the website. For example, if I have a crypto trade on, I look here. Standard for crypto is Bitcoin, which is here, and these are all variations of crypto, or I'm going to say prototypes that came after to represent the same thing, digital assets. So Bitcoin is this guy here. Something to be aware of when something makes a record high like this, you gotta make a little note because either it's a trading, I'm gonna say opportunity, or a trading, I'm gonna say thing you should look at to make money. So I'm gonna take a look at that right now. The BIT is the index for that. It's this guy. So when they were trading Bitcoin, they didn't really want you to pay $111,511.36, which is a cost of a coin. Okay. That's too much money. Most of us, we can afford $63.44. So it trades like a share, also known as an ETF. So that's basically what ETFs are. It's the ability to trade an idea from a share form, and usually a lot less expensive form. Because as I've said before, most of us can at least buy, I don't know, 5, 6 shares easily. Okay. So let's see how this works. It says here Bitcoin, and this is what we call pre-market prices. So the software program, it allows pre-market prices. That's before 9:30 a.m., the stock market. And in this case, it's pre-market for IBIT, which trades as a stock, in this case, an ETF in the normal market hours. So it's telling you where it's going to start at. Okay. Bitcoin itself trades 24 hours a day, pretty much. Okay. So when you're trading what we call futures trading, all of those things are almost 24 hours. So all of these things that we look at, Okay. They're all futures trading. You can tell because of the time. There's some times here. So when prices are moving, you know it's trading. That's the general idea. Prices are moving there. Just moved just now. So this is up 3.28%. So this is going to be reflected pre-market. You can see it's pretty close to 3%. Okay. So these guys have a little bit of lag because these traders, they look at Bitcoin, okay, the Bitcoin traders, and then the Bitcoin index traders, ETF traders, they kind of lag because they got to look to see what the futures trader is doing first, and then they price it in here. So this number will always be lagging in reality from the futures price. The Bitcoin itself, futures price dictates what this number is going to be, what these traders are going to do, when they're going to do it. That's how things work as far as timing and sequence. Okay, these guys don't price and then Bitcoin moves. Bitcoin is the standard, it's a source. It's what starts everything. It's what motivate these guys, this volume, to buy this ETF because this price is starting to reflect what the actual commodity is doing. Just so you know, crypto coin is considered a commodity.
Okay.
Okay, because they mine it. It's like, oh, you mine gold, you mine silver. If you mine Bitcoin, I don't know. Kind of sounds like a commodity to me because of the same process. Got it?
Got it.
So, new high. What does that mean? It means it's the highest price in a year. So if they tell you the actual commodity itself, the coin itself, the digital asset itself is at a new high, and by the way, this is an all-time high. All-time means not just the highest in 1 year, it's the highest ever from its born, that thing, all time. Okay, just so you know.
Okay.
So it's more significant because it means that anyone and everyone who's bought the actual Bitcoin itself are making money. Don't care who you are, when you bought it, where you bought it, how much you bought, doesn't matter. Every single one of those animals is making money. So I know there's a lot of disbelievers in Bitcoin. Apparently the world don't care. Yeah, this idea that, you know, we think logically and rationally, it doesn't work. Nobody cares. I'll tell you right now, I don't I don't I'm not crazy about Bitcoin. I would never put my own money in Bitcoin. But you see, I'm a trader. I can't be biased like that. So I have to buy Bitcoin and make money, manage risk. I'm going to show you the trade how I think it should be done and always done. You might know this as well because it's something that we do. So I'll just do the simulation here for you. I'm actually going to put this in your account. So this is this guy here.
Okay.
So as you know, we buy shares in lots of 100, right? They're called round lots. Okay. So that's bought. It's bought right there. It's a dotted line. Okay. Actually, I shouldn't say that. It's not bought because it's not 9:30, but it would be bought. I'll just do the simulation anyways. So you would buy a put at 63 bucks probably for a month. Just so you know, insurance is called puts. Okay. So this has to be puts. 63. Let's go find that number. There it is, right here. So you'll be paying about 395. Okay, the way you buy this, in this case, you just say buy. So these are the keystrokes that you would use at 9:30 or in your Questrade account
Okay.
or whatever account you have. Okay. So our cost is a, excuse me, let's see here, 363 and a half. So call it $4. Okay, $4. $4 per share is what that is. This is insurance is quoted on a per share rate. Okay. So if you buy 100 shares, okay, a put is insurance for 100 shares. Okay, a put is insurance all the time, every time. That's the quantity. Okay. So 100 times this number is 400 US. That's your cost up front. Let's say COB, cost of doing business. You cannot trade it without insurance. Maybe when you get experience and you can there's a variety of things you can do where the insurance doesn't have to be exactly like that. But I'm just going to keep this really simple. We don't trade without insurance. So that's the beginning of the trade, how we set it up. Now you have to make $4 in profit to cover this insurance. What does that mean? It means that this needs to be at like 67.50. So you can make $400 on the shares, right? If this goes to 67.50, $4 from here, you'd make $400 on the shares, right? Because you have 100 and it'll be times four. Got it?
Got it.
Okay. So this is what we call your break-even price for the trade.
Okay.
Break-even. That means your expenses are covered. This thing, your expense, this thing here.
Yes.
Okay. So once it gets to this number, anything above that is your profit when you start making money. That's why it's important you understand what these numbers are and how you get to them. How do you figure this? Oh, it's because I have this cost and I need to get here to make this amount of money. That's why. So therefore, anything above this is going to be profit. Easy?
Yes.
Not so hard.